Rajiv Memani, President CII, good person to get on that. Private investment, just not picking up. And I'd like you to give me a good answer as to why that's happening, Rajiv.
Hi Rajdeep. No, I don't think it's accurate to say that private investment is not picking up. I think private investment may not be growing to the extent that we all want to desire. But I think private investment is picking up in the last 12 months, 18 months. Even if you look at the data for March 25, I think private investment showed good signs. I think during the first quarter of this year, it slowed down a little bit because of all the tariff-related uncertainty, but it started picking up again. So I don't think it's accurate to say that private investment is not picking up. That's first. Can it do better? Surely it can do better. I think there's much greater potential. Balance sheets are under leveraged. Economy is growing very well. So it should be picking up much more. And I think my personal view is that it will pick up more as capacity utilizations go up. And I think as we have more focus around ease of doing business, more focus around factor cost of production efficiencies in India, more focus around which are the goods and services that India really wants to focus on. Maybe a list of 7,500 goods that India wants to focus on. I think it'll get a boost further. One of the other reasons, Rajdeep, that there is a challenge also is because of the global uncertainty, and you have large manufacturing capacity that's built up in one part of the world. I think there is always the price volatility, commodity volatility that happens because of that, and also the amount of technology and investments that's gone there. I think sometimes even for private sector to take that risk and leap of faith, they would need some more, maybe that's why I said focused PLIs, focused incentives to ensure that they're able to weather the initial storm when they're looking at setting up large investment capacities in India.
Maria, you have the numbers.
Yes, so if we were to look at the private investment trends, the latest trends in India, sir, it looks like, in terms of financial year 2023-24, it was around 4.2 trillion rupees. In 2024-25, it did go up, but in 2025-26, it is around 4.89. What do you think should be done, Rajiv Memani, in this sector then, for the private sector to pick up that trend, because that's needed?
No, it is. I think it is picking up. I mean, if you go sector by sector, you can say that the numbers are picking up. As I said, the first half of this year, it was slightly slower because of what was happening in the rest of the world. But private investment is picking up. Having said that, as I said, there is always more that can be done given where Indian economy is. My first thing is, I think we need to have, as was said earlier by Rahul, I think on ease of doing business, on factor reforms, I think India needs to be more competitive. Land reforms, availability of land. It takes more time to set up plants, projects in India. And I think the government has done a lot in the last 6 to 12 months. I think we also need to communicate much more. So I think that's one area that I think we need to be doing more. And secondly, I think we need to have, we talked about the success in electronics manufacturing and others. In semiconductors, we are seeing good success. One of the reasons for that is we have a very clearly laid out incentive scheme, especially in newer areas and others, PLIs or other incentives that have been given. I think for chosen products where India wants to be, as was said in the economic survey, where we want to be, strategically well-positioned, strategically resilient or dominant, whatever the word used is. I think those products we need to identify and have a clearly laid out path in terms of technology partnerships, incentives, buying preferences, long-term glide path on customs. I think those are the areas that we need to look at, and as was again said by Rahul earlier, I think if we have customs duty rationalization, that we will, at least for the raw material products and others, that will also make India competitive. I do believe that as India signs the FTAs, and once these FTAs become effective, which will take, which could take 6 to 12 months depending on the FTA we are looking at, if that happens, then that will give another boost to manufacturing in India. But I do agree, Rajdeep.
Dr. Maru, you wanted to put a word in.
Be one of the central things.
Sorry, Rajiv. Yes. Yeah. Go ahead.
This is when I miss Rahul Bajaj. You said earlier about Indian business giving 11 out of 10 for every budget. the fact is
I said it a few days ago, yes, maybe yesterday, yes.
the fact is that private investment has not been picking up for 10 years. Forget about last quarter or the last year. For 10 years, it's been stagnant. And the government, the finance minister herself asked Indian business, why are you guys not investing? We talk about animal spirits. I wish Indian industry were more forthright in telling the government why they are not investing, rather than fudge around and say, no, it's going up a little, it will go up. Come on, there is a major problem of confidence.
Yeah, go ahead, Rajiv.
No, so I would say private actors are rational. If you look at capacity utilization, it's been stuck below 80%.
Exactly.
So why would people put up more capacity if your existing capacity is not utilized?
No, but isn't it partly, or at least that's the explanation given, that we live in extremely uncertain times?
No, Rajdeep,
and the geopolitical risks are such.
I'm afraid that's not the answer. The real problem is demand. Why is capacity utilization low? It's not,
No, it's not low. I think it's optimal.
No, it's not optimal. It's below 80%. Optimal, you say optimal when you hit 80%, that's when companies begin to look at future investments. It's been below 80%.
Let me bring
my take on this is it is productivity driven.
Demand is not picking up.
So productivity is making your assets sweat better.
No, but unless you get demand, unless domestic demand picks up, the
There is a
government has
demand
made
problem.
efforts.
Clearly the economy has been growing, right? The economy has been
But
growing.
why is it therefore, when the economy is growing, when your macroeconomic numbers are so solid, why is it that investors are still not putting their money where their mouth is the question?
One data point and one question. Data point is Indian companies are sitting on at least 6 lakh crores.
Yes.
Okay. The question they are asking is, what do we produce that China is not able to sell in India? Because we are not competitive against China on across the board.
But Shankar,
things.
demand is also not picking up.
That's a secondary.
That is why you gave those GST
So
reductions.
demand has come from more service-led industries.